Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. It has been quite a beautiful and profitable week for all of us in this community, as all the assets we have been monitoring since the beginning of the week has been doing pretty well, though we have some more profit than the other. But in from an holistic perspective, we are doing very fine. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby. Today we are going to be diving back into the financial landscape to look at things from a fresh new perspective using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update or an idea of what we will be doing on today. So we are going to be expatiating on that, and of course use the information we can identify on the chart to strategically position ourselves for the next move. Before we start before we go into the details, I know that there will be some newcomers in the house who definitely will not know what this is all about, so it's important that we also keep them in alignment with what the process is like here. So as technical traders, we usually gather here every day as a community, coming to do follow-ups and reviews on our current trading positions in preparation of both the London and the New York session. Well, this follow-ups is a response to my weekend videos, which usually portrays what our ideas is going to be looking like for the new week. So following up with that video, we come here every day on the Forex Morning Mastery to strategically position ourselves for the next move, while we also see how we can manage the current position we have, if we have any running. The session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So far this week, we have been monitoring 3 financial assets, which includes the USOILSPOT, the GBPUSD, and the XAUUSD. Now, before we go into the technical details of what is going on in the market, it is our practice here in this community to keep tabs with the fundamental factors that are likely going to be influencing the market sentiment today. And for those of you who have been with me for a while, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the United Kingdom. Now, for today, since the beginning of the week, we've had quite some impactful event. Yesterday we saw the BRC like-for-like retail sales, which came in below expectation, and of course we saw how the pound sterling reacted negatively to it before it finally gained momentum again. Then later yesterday we saw mixed data from the S&P Global Composite, which came in beyond expectation, giving us a positive traction giving us a positive deviation of 1.87, and we all know how important this is, as it gives us an idea into how well both the manufacturing and services sector of the United States is doing. Then another high impactful event we saw yesterday was the ISM Services PMI, which is a leading indicator gauging business activities in the United States services sector. And below all expectations, the data came in at 52.66, which was below the economist's projection for the month of February, and of course it was also below the data that came in last month. And we saw that this also affected and placed some downward pressure on the US dollar, as the US dollar continues to drop, and while the US Treasury bond yield too continues to struggle to gain any traction. Then later yesterday we had some speeches from Barr, though I'm yet to have an highlight on that speech. Maybe by tomorrow we should be getting something, and I will be sharing them with you. So today, Wednesday, March 6th, we are going to be looking at a couple of high impactful events. So I had to include some mid-tier economic features to have a broader view of what market participants will be looking forward to today. Now, today we are going to be looking forward to, the first one on the list here is the budget report. That is from the United Kingdom economy. And the budget report is presented by the United Kingdom Chancellor, that's Jeremy Hunt, who is going to be giving us an insight on the government's plans for taxes and spending, especially with the anticipation of the general election coming up later in the year. And this will give us an insight into what the plans are as regards to this, of course, and will give us some traces of possibilities of what the United Kingdom economy is looking like. Then we are going to be looking at the ADP employment change, which is from the United States economic docket. That's the ADP employment change. This is coming up in about many hours from now. That's about 4 or 5 hours from now, I think. So we want to be marking the timing down so that we can be around marking out some structures that we will be using to position ourselves for how the market will react to that event. Now, for those of us who do not know what this is, the ADP employment change is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. A positive ADP figures indicates job growth, which often boost market sentiment as they suggest a healthier labor market, while a negative figure may lead to concerns about economic slowdown and weigh on the market sentiment. Now, if we look at the previous data for the month of January, it came in at 107,000, and we have consensus, that is economists projecting 150,000. So we think that economists are projecting an expansion in that sector. So we look forward to see what the actual data will be like. Will it be just as expected, below expectations, or even beyond expectations? Then we are going to be looking at the JOLTS job opening, which is also an indicator of the labor sector, is usually released by the US Bureau of Labor Statistics, and it helps us to measure job vacancies. Now, the higher it is, the better for the economy, and the lower it is, the less better, let me put it that way, for the economy. So we have for the previous month we are looking at 9.026 million, and economists are projecting 8.9 million. So it's a little bit lower than the previous month, so we shall look forward to see what the actual data will be. Then one of the most important events for this week is the testification of the Fed's chair, which is a 2-day event, and starting in about 6 to 7 hours from now. Everyone is definitely going to be looking forward to the Fed chair's testification before the Congress, and this will be giving us an insight into a broad overview of the US economy and monetary policy, and his remarks are going to be published ahead of the appearance on Capitol Hill. So definitely everyone will be looking forward to this. Remember, the market is currently in a limbo as regards to the timeline for the monetary easing cycle for the Fed at this point, and we've had a lot of mixed data from the United States, which has supported both imminent rate cuts and interest rate being extended for interest rate being remain high for an extended period of time. So we want to have an idea of what is going on, and let's see if the dollar will gain traction based on whatever it says today, or it will continue to be subdued. So, and besides that, we are going to be looking forward to some speeches from Fed officials later in the day. We have Daly, we have Beige, we have Kashkari, and all of their comments is going to be giving us an insight into the bank's monetary policy stance, economic outlook, and potential future policy action. So these are high impactful events that everyone in the market will be looking forward to for fresh impetus. So as technical traders, we do understand that the anticipation of this event has a way of influencing the market sentiment, which obviously will reflect on the chart as price action. So what we are going to be doing today, as usual, is to run through the current market dynamics, looking out for patterns and structures that we will be using to strategically position ourselves for the next move. So I recommend that you stay tuned in so you don't miss out on the insights that we will be deliberating on. And if you are yet to give the video a thumbs up, please do so. I really appreciate it. Your likes are very valuable to me, and of course it also helps the YouTube algorithm to promote the video to a wider audience of traders, which eventually will help the community to grow. And thank you very much as you do so. So with that being said, here we shall be diving right into the business. But before I do, I can see comments from Rex Vagara. Good morning to you, Rex. Trust you are doing very well, and glad to have you around with us this morning. So the first asset, as I said earlier, is going to be the USOILSPOT, and so far this week we have been profitable on this asset, though we had price action hit our stop loss yesterday. And in fact, I would like to take us through what really happened at the beginning of the week and what led to the decisions we made as regards selling the USOILSPOT. And before I go into the details, it's important that I state that we are only going to be analyzing the 1 hour time frame, which is our execution time frame. And if you do want to see our top-down analysis on this asset, on how we get to the level we are seeing on the 1 hour time frame, I will recommend that you watch my previous videos on these assets, the one I did on Monday, where we did a top-down analysis on this asset. So if you in any way missed out on that, the links are right in the description box of this current video you're watching. So with that being said, let's run through what really happened at the beginning of the week. So at the beginning of the week, we identified an ascending trend line with this one right here, and it was actually going to be a major determinant of how the trend is going to play out for this week. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying, and not unless the trend line is broken to the downside can we start considering selling. Now, in addition to the ascending trend line, we did see how the new week started with a consolidation phase, where price action was initially confined within the $79.80 level and the $79.25 area during the first 8 hours of the new week, to emphasize the prevailing uncertainty in the market at that particular point in time. And usually when we have a range-bound trading activity like this, which of course emphasizes the uncertainty, we usually exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down of the support line to give us an opportunity to sell. And during the I think a couple of hours after our live session on Monday, we saw our price action broke down the structure, the support line of the $79.25 level to signal selling opportunities. And I can remember that I shared an update immediately after this happened, I think about an hour or two after, that a retest of structure will be all we need to join the bearish move. And then we saw price climb up, and with a sell stop order below the $79.25 area, we joined the bearish move to the downside, and we added more positions. I think we added one more position at the breakdown of the $78.50 level. And as at yesterday, we had all our sell positions closed after noticing the buy pressure that resumed around that area. So as at yesterday, we were running with about 150 pips on our portfolio on the USOILSPOT. Now, during the live session yesterday, we begin to notice the potentials that buyers may likely come into this market. Remember, and we said something like a potential reversal pattern is gradually unfolding around here, where we were looking at a potential head and shoulder which later did not mature at all. However, one thing we said here yesterday is that the $78.50 level, which happens to be our key level for the week, and of course it was also serving as a potential neckline on the daily time frame. So for those of you who saw our video on Monday, you will be familiar with this structure, and we said that we would like to see price break out of that $78.50 level to give us an opportunity to buy. And of course, with a buy stop order above that structure, we saw how the market broke out of that level, moved about 40 pips in our favor before it snapped back into the entry point with a strong bearish engulfing candle, taking us out of that position in the loss. Personally, I did not move my stop losses as I was hoping the price will continue, and I wanted to give enough room, but unfortunately we saw price take us out in a loss on that one. And as at this morning, we saw price action triggered a sell position below the $77.70 area, and in fact that one too is not doing well right now. As you will see, price action is currently running in a loss of about 30 pips at this point, and I'm beginning to suspect this bearish move due to the continued buy pressure we have observed between the $77.20 area and of course the $77.70 level. So this area here is becoming a buying niche. As you will see, every attempt by the sellers to break through this area has been met with strong resistance from the buyers. Now the question here is, are we going to see price continue the momentum to the upside, or will this still give windows for sellers to come in? So what are we looking at for today? And in order to position ourselves strategically for the next move, it's very pertinent that we also understand the psychology or the fundamental that is driving the current market sentiment. Now, concerns about demand are dragging down the crude oil prices due to recent data showing slower economic activity in the United States. We saw the report that came in yesterday, which was below expectations. And of course, we will also take into consideration the weather situation, where a warmer than usual winter has led to less demand for heating oil than anticipated as the cold month come to an end in the northern hemisphere. Now, energy markets are waiting for an increased Chinese crude oil demand that has yet to materialize, and in fact China is aiming for a modest 5% growth in 2024. And you will be wondering, why are we focusing on China's economy? Well, China is considered to be the largest importer or consumer of oil, and if the economy of China is not doing well, then definitely the demand is going to drop. But if the economy is buoyant and expanding, we want to see this reflect in the oil market as a strong demand. However, it is worth noting that the weaker US dollar could help support oil prices at this point by increasing demand from buyers using other currency. And what does this simply mean? Well, whenever the price of oil is, whenever the whenever the US dollar it becomes cheap, that is the value of US oil becomes cheap, those economies will spend currencies besides the US dollar will find it cheap enough, and the US oil being a US dollar denominated asset, a majority will want to start buying the US oil due to the cheaper US dollar. And if this is going to be the case, we may likely, if the US dollar continues to drop, we may likely see some positive traction in favor of the US oil that could drive the price of oil higher. So we are going to be taking that into consideration when we look at the technical structure too as well. And yesterday we saw the US API weekly crude oil stock report, which came in at 0.423 million build up for the last week, which is not that encouraging if we compare it with what happened last week and the previous week and the other weeks before the previous week. So though there is a build-up of stockpile, but it's not as emphatic as what we are used to. And this for me is a sign that we may likely be seeing a build-up in momentum for demand of this asset. And if this is going to be the case, we may likely see a bullish traction today. And as a result of this, market participant will now be focusing on the upcoming US EIA crude oil stock change report, which is coming up later today, which will definitely be giving us more insight into the crude oil stockpile in the United States, and of course will be giving fresh impetus into this market. And from the little information we have from behind the scenes, it looks as if the US oil is going to rise today. And if we go into the technical structure, looking at the 1 hour time frame here, the first thing you would observe is that the market has been very bearish since the beginning of the week, and after connecting the series of lower highs, we have this beautiful descending trend line to work with. And you know how we use our descending trend lines in this community. We will only continue to sell as long as price action remains below the descending trend line. Now, with the way things are going now, where we have been noticing the inability of sellers to continue the momentum, as you will see, every attempt to do so around this area has been met with strong resistance from the buyers. Now, the appropriate question we want to be asking right now is, will this bullish momentum lead into a situation where price will break out of that descending trend line? And of course, if this happens, this will be the first time price will be breaking out of that descending trend line for this week, and this could welcome buying opportunities. Now, are we going to be waiting for a retest of structure for confirmation's sake to join the uptrend move? Well, that depends on where you are with us. Now, what do I mean by that? So for those of us who are still profitable on the USOILSPOT, we can afford to place a buy stop order above the descending trend line to capitalize on the bullish move. So what this simply means is that you have a leverage to we have made some profit this week, so we can actually risk some of the profit we have made so far to test water around that area to see if it will work. And if it doesn't work, we know that we are only risking some of the profit we had made. However, if you are new with us, you do want to be exercising patience, as you do not have any leverage to bank on, so you want to see price breakout and retest the structure before jumping into that bullish move. And if we are going to be jumping into that bullish move, what level are we going to be looking at to join that? Now, if we go left a little bit and go into as far back as the beginning of this week, we can see we have something like this around here. This level here had played a major role since the beginning of the week, so we are looking at somewhere around the $78.25 level, which interestingly shares a confluence with that descending trend line. So if price breaks out of this key level, it's not a key level, this level, with price also would have broken out of that descending trend line, welcoming bullish ideas. And if price continues to climb new highs, then we shall be looking at more opportunities to buy at the breakout of the $78.25 level. And we have multiple entries like the $79.25, the $79.80, and of course the $80.30, which happens to be the highest level price action has been for this year. So this is how we are going to be managing our buy positions for today. So let's see how the market is going to be playing out as we continue to monitor price action. So this is my bullish perspective here. I want to hold on to a bullish bias on this one for today. Now, in as much as we're looking out for bullish bias, what are the conditions here that will make us still open ourselves up for more selling opportunities at this point? For me to sell this asset, I really need to see a significant confirmation below the $77.70 area, something like this: breakdown, retest, continue selling pressure below the structure before I jump into any position. But if we have any of such, I would definitely let you know in the comment section of both my TradingView and Telegram platform. So I will be giving you update in due time. So at this point, I still maintain a bullish bias here. Let's see how the market will play out going forward. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So I see you, Maya FX. Good morning to you. Glad to have you around with us this morning. In the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. For those of you who had clicked on the like button, thank you very much. For those who are yet to, please do so. It doesn't cost you anything at all. This is the cheapest way you can actually support this community to grow, and thank you very much as you do so. So with that being said, we will be moving right into the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, which has done pretty well since the beginning of the week. Remember, we have been buying this asset, and I told you yesterday that I wouldn't be considering selling at all on this asset, as the current market is still looking very, very bullish. And the only condition that will make me sell is for that descending trend line to be broken to the downside. Remember, we talked about this descending trend line here yesterday, and that even if any sell or bearish momentum come in, it could be a retracement that is aiming at a retest of the structure in an attempt to continue the uptrend. And I did emphasize that if you're willing to sell, or probably you are a scalper or you are a fan of short-term trading opportunities, you might actually capitalize on that opportunity, which will be dovetailing to a minimum of 20 to a maximum of 35 pips to catch if you are the counter trend trader, but price did not really move that well. And if you had sold, if you are a counter trader or a scalper who has sold, I do hope you moved your stop losses accordingly to secure your position. As I did mention yesterday that it's going to be a counter trend opportunity. Now, as it is right now, let's run through how the week started for us all and what led to the decisions we made. So at the beginning of the week, we did acknowledge the fact that price action broke out of that descending trend line we identified on the higher time frame. Now, a quick reminder, if you had missed out on my weekend video which illustrated how important this trend line is and other structures, I would encourage you to look at the link in the description box below to have an insight into how we got to this point. So the beginning of the week saw price started on a bullish note as we saw this range identified, and as a result of this, we positioned ourselves above the resistance line of that range to capitalize on our first buy position. We saw the first buy position triggered at the 1.26670 area, and in fact we saw how the market came back to retest the structure to continue the uptrend. And don't forget, we had multiple entries. We had the 1.267, remember, we also had the 1.26800 area, and of course we had the we had the all right, okay, I'm trying to pick this one. So we had the 1.26700 level, which of course did not do very well as selling pressure came in. So the fourth position did not do well, but the first three did very well, and at the end of the day we were profitable during the first trading day of this week. Now, during our live session yesterday, I did emphasize that I will continue to hold on to a bullish bias here, and I mentioned that we shall be looking out for more opportunities to buy at the breakout of the 1.268. Remember, during our live session, price action was right below the structure, and I did emphasize that the fact that price action still remains above our key level, we have no business selling this asset. So we added one more position again yesterday at the breakout of the 1.268, 1.26850. We added one more, a final breakout of the 1.267 after it failed yesterday, and we saw price climb into the 1.27330 area before the strong bearish momentum came in. And as always, whenever price action moves significantly in our favor, we obviously want to move our stop loss, and I do hope you moved your stop losses accordingly. If you had done so, you must have been taken out with a reasonable amount of profit. I actually had my stop loss around 1.2713. That was about 30 pips on the first buy position, and about 27 pips on the second. That's about 57 pips, and the third one here had about 14 pips, while the fourth one here went into break even. So we had roughly minimum of 50-60 pips on that particular move. And this morning, while I was dissecting the current market structure, I did updated us that we will continue the uptrend scenario as the 1.267, 1.27130 and the 1.27330 area are levels that we will be looking out for more opportunities to buy. And like I said earlier, despite the recent pullback we saw here, the bullish outlook still remains very strong as market participants are waiting to hear from the United Kingdom Chancellor Jeremy Hunt, who is going to be talking about the government's plans for taxes and spending, and is also going to be and there is this expectation that it might lower the amount of money employees have to pay for national insurance, which of course is similar to what they did during the last autumn. So we're looking forward to hear what he will be saying. That is coming up in about 3-4 hours from now. And on the other side of the pond, that is from the United States, market participants, I think the dollar is struggling at this point in time, and the US macroeconomic data is not helping matters at all. We saw the US ISM services PMI yesterday, which came in weaker than expected, putting further pressure on the US dollar. And today we will be looking forward to a couple of events that will be giving fresh catalyst into this market. In the United Kingdom, we did talk about the retail sales for February. We talked about the CIPS construction PMI, which is coming up later today. And then we have the Fed chair's testimony before the House of Congress coming up today. We have the ADP employment change report, which is coming up later today too. So it's always important that we know our timings very well, know when it's going to be happening, and then let's look out for structures around that timing to strategically position ourselves for the next move. But personally, if you would ask me, I still think that this market still has enough room in the upside direction. So, and looking at the structure closely, you will see that price action is still trading above this ascending trend line. And of course, you know how we treat our ascending trend lines in this community. As long as price action remains above them, we will have no business selling this asset. So we're looking out for more opportunities. Currently, we have 2 buy positions triggered already. We have one at the 1.267 and another one at the 1.27130 area. So for those of us who had capitalized on this opportunity, kindly move your stop losses somewhere above the 1.267 seems most reasonable at this point in time, while we continue to monitor price action for new trading opportunities. And of course, we have a buy stop order above the 1.27330 area, where the breakout of that structure will welcome more buying opportunities. So let's see how the market will play out from here, and I will obviously be giving you updates as at when due. Now, for those who are considering selling this asset, personally, like I told you yesterday, I'm not selling. Even if any bearish momentum comes in here, I want to see it as a retracement move into either the descending trend line here that was broken, which lines up with the 1.267, or the descending trend line we identified on the higher time frame, this one right here. Maybe price is coming back to retest that structure in anticipation of that uptrend move. So the only condition that will make me sell here is for price to break down this descending trend line and the key level at the 1.267. And of course, you know, when price breaks down our key level, we want to be looking out for patterns and structures that supports the idea of selling. So that's the only condition that will make me sell the GBPUSD today. So let's mark out these levels on our chart and let's use them to guide our trading decisions for this week. So this is my simple view on the GBPUSD for today. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page. So all I've said has been quite explanatory. So with that being said, let's move on to the final assets on our watch list for today. So the next asset on our watch list for today is my favorite asset, of course, and that is the XAUUSD, popularly known as the gold spot. And all our buy positions from Monday's trading session still remains very much active as gold prices continues the momentum to the upside. And let's run through what really happened at the beginning of the week. We are running with over 6 buy position at this point, dovetailing to over 700 or 800 pips thereabout, I'm guess. Let me see, let's look at it together here. So at the beginning of the week, following last week bullish momentum after the below expectation figure for the ISM manufacturing PMI from the United States last week, we saw how the gold gained enormous traction, pushing price into a range where it was more of a range bound trading activity during the first 6, 7, 8 hours of the week, as we saw price confined within the $2,086 level and the $2,079.50 area to emphasize the prevailing uncertainty in the market at that particular point in time. And usually whenever we have a range-bound trading activities like this, we exercise patience and wait for either the breakout of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. And coupled with the fact that price action was trading above our key level, you know how we use our key levels in this community, of course, it was reasonable that we look out for buying opportunities. But remember that we did not ignore the potential that this range-bound trading activity could incite a reversal pattern as well. So we had our sell stop orders below the $2,079.50 level, which of course never happened, but instead we saw price break out of the resistant line of the range, had a 2086 level to trigger our first buy position for the week. And since that moment, we have been buying the XAUUSD, added more position at the $2,088 level. We added more at the 2,101 level. We added more again at the breakout of the 2,115. We added another one at the breakout of the 2,120. This one was yesterday's trading session. And then I did mention during the later part of the New York session that we will be adding another one more at the breakout of the $2,127 area. And all of these positions are still running and active. Look at the first buy position is running with over close to 400 pips. The second one is running with about 370, that's over 700 pips. The third one here is running with about 230, and the fourth one is running with about 100, so that's about 900 thereabout. And the fifth one is running with about 70 pips, and the sixth one here is running in a loss of about 23 pips. So we have close to 1,000 pips on the XAUUSD, which is not bad at all, at least for the first half of the week. So we are back into our winning ways on the XAUUSD. And for those of us who capitalize on these opportunities, well done and kudos to you. And if you still have a buy position running at this juncture, you do want to be moving all your stop losses right now to secure the profit you have here, as we are looking at a situation that is more of a overbought condition, especially on the higher time frame, and it is very, very likely that we could see some bearish traction come in anytime soon. And if we look at things from a psychological perspective, it's clear that price action is at an all-time high area, and whenever price action falls within this kind of territory, it usually takes a while before price action acclimatizes to the zone. And this is due to the fear of price crashing from this area, as those who had capitalized on the bullish opportunity may at some point, and out of fear, feel that the market may crash, and due to this reason they want to be closing in some of their positions from the market, and this usually results into choppy market conditions, retracement phases, and of course consolidation phases, which has been peculiar in the last 12-15 hours or so. So it's important that we ensure that all positions are secured at this point. And if you would ask me, anywhere between the 2124 area and the 2120 area seems most appropriate to place all your stop losses as we give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Of course, we have seen how during the Asian session our gold prices reversed some of the profit it made yesterday. Look at what has happened here. In fact, since the later part of yesterday's trading session, we saw the sharp rejection. We saw a lot of shooting star candle, which technically is a very strong signal that sellers are present in this market. And if we consider the event coming up later today, that is the Fed chairman's testification before the House of Congress, I have a strong feeling that he will want to make some hawkish remarks or statements that will incite some positive traction in favor of the US dollar today. I very much suspect that, and this could lead to a significant move to the downside, and we also want to be taking all of this into consideration. And this is one of the major reasons why I said we should secure all the current positions at this point in time. Now, at this juncture, market participants seem reluctant and prefer to wait for more cues from the Federal Reserve rate cut path before placing fresh directional bets. Hence, the focus remains glued to the Fed chair's congressional testimony, which will play a key role in influencing the near-term trading activity around the US dollar market dynamics and provide fresh directional impetus to this asset. Now, in the meantime, the growing acceptance that the Federal Reserve will start cutting interest rates in June, along with the yesterday's disappointing US macroeconomic data, keeps the US dollar bulls on the defensive and continues to act as a tailwind for the gold prices. Now, while we have all our buy positions safe at this point, what are the things that we will be using to guide our trading decisions for today? Well, looking at the structure and taking into consideration what happened since the later part of the New York session, I have a beautiful ascending trend line to work with for today. So after connecting the series of high and lows in the last 48 hours, we have the structure to guide our decisions going forward. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we want to continue to look out for patterns and structures that support the idea of buying. Now, in addition to the ascending trend line is this descending trend line right here. So I would like to mark this one's out too as well. Let's look at this together so you can see the touch of this week's price has been finding lower highs, sorry. And the only condition that will make us consider selling this XAUUSD today is for price to break down this ascending trend line, which interestingly shares a confluence with the $2,127 level. Now, there are two ways to which we are going to be capitalizing on this bearish move. The first one, that is for those of us who are profitable so far this week, is to place a sell stop order below the structure, and let's risk some of the profit we have made so far to see if price action will continue in that bearish move. And if it doesn't, it takes us out in the loss. We know that we are only risking some of the profit we had made so far this week. However, if you're a conscious trader or someone who this is your first time taking a position with us, then I would encourage you to exercise patience and wait for a retest of structure to happen before jumping into the sell position. And if this is going to be the case, we are looking at multiple entries, especially at the 2120. And I want to state here that if price drops and breaks down the 2120, we might likely see a massive move to the downside. So we do want to be on standby to maximize on this move. So we have the 2110 area, another level to add more sell position. We also have the 2101 too, and I will keep adding more positions as I continue to monitor price action and give you feedbacks on both my TradingView and Telegram platform. However, if price action breaks out of this descending trend line and a retest of structure, then we are going to be looking at an uptrend continuation pattern on our table. Now, to join this uptrend continuation pattern, I want to be looking at an entry point at around the $2,131.50 level. So you want to be marking this one out on your chart right now. So we have a $2,131.50 level. So this is where we shall be adding more buy position if price action breaks out of that structure. So this is our simple view for today. As you will see, it's a simple trading setup where our center of focus is basically going to be between the $2,131.50 level and the $2,127 area, where depending on the direction of the breakout will give us an insight into where price is likely going today. So at this point, it's looking a little bit bearish. At this point, we've had multiple shooting star candles here. We have price break down our ascending trend line, and a retest of structure will be all we need to jump into a downtrend continuation. And for those of us who already placed a sell stop order, it's all fine and good. Let's ensure we have enough breathing space for our stop loss. Anywhere above the $2,131.50 level will do just fine, dovetailing to about 40 to 50 pips stop loss depending on where your entry point is. So this is my simple view on the USOILSPOT, on the XAUUSD for today. I hope I made myself very clear. And if you have any questions whatsoever, feel free to let me know in the comment section. I'm yet to see your likes, guys. We say only have 3 likes here. I really seek your support in helping this community to grow. So let's see if there are any questions whatsoever before we round off on our Forex Morning Mastery for today. If you have found this content helpful and useful in making your independent trading decisions for today, I would greatly appreciate your support by giving the video a thumbs up. Your likes are very much valuable to me, and it also helps the YouTube algorithm to promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. So in the absence of no question, I think it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. It has been a phenomenal week for us all in this community, as we are running in profit on all the assets we have been monitoring since the beginning of the week. And once again, congratulations to everyone who deemed it fit to stay faithful to the analytical approach. Today we were able to take on the 3 assets we've been monitoring, and that is the USOILSPOT, the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns only to strategically position ourselves for the next move. And I do hope you all marked out these levels as we illustrated during the course of the session. If you had done so, well done to you. So all we need to do is allow the structure to mature, and then we are good to go. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place to mitigate against any risk on our portfolio. For those of you joining us for the first time today, I do hope you are able to gain one or two things from what we discussed here. If you did, you want to be part of our subsequent editions, trust me, the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing you all the same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and get ready for tomorrow's trading session, which also promises to be an exciting one, as we will have gotten a glimpse into what the Fed chair is going to be saying as regards to the monetary policy for 2024. So I wish us all the best of luck, and trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.